update for this Tuesday, the 15th of March, halfway through the month already, and spring's right around the corner. And this is the time now getting on 8:45 a.m. Central Time. A lot of economic data today. Stock market up on it because the data was in line with what was thought. But when you take a look at some of these markets, I made a mention yesterday, and others have picked up on it today, that it looks to me as though trade tops have developed in a number of markets. Crude oil, you're no longer $130. You're under $100. Gold, you're no longer near 20,070. You're back to 1915 as a low here. The dollar's not over 100. It's under 99 at this point. Now, the dollar's down in part because it doesn't have the edge any longer of the fear of Ukraine. That's already been discounted. The second thing is everybody's raising interest rates, not just the U.S. Then I step over, I look at the bonds and notes. You should get some short covering in front of tomorrow's FOMC meeting. Take a look at the Bollinger Bands. You went right down to the bottom of them. For those of you that are my morning subscribers, and that's earlier than when this comes out, I was screaming this morning, you got to have covered short positions going into tomorrow's FOMC meeting. And now you're getting the bounce. The market was a lot lower than this when I was putting out the update this morning. Wheat. You keep hearing Russia may curtail wheat exports. You don't want to be short wheat. Yet at the same time, the other grains and the cotton coming down. So tops, formations. We're going to see the farmers go into the fields. We're looking in the Ukraine as to, I saw the first report today of how much reduction of planting can happen there. Remember, that's the breadbasket for wheat of a large part of the world. Maybe a 40% reduction. That's still 60% of the crop being planted. Not as bad as I was fearful of. So important information coming there. In the copper market, you're not at $5 anymore. You're 10% off it. So these numbers are going to work themselves through inflation, and at some point as we get these numbers into it, be in the month of April or so, inflation's going to look, to me at least, like it's abating a little bit. When we look at the New York State Manufacturing Survey, down 11.8. They expected an up reading. So this gives you an idea how weak these readings have got. The new order index doesn't exist. A negative 11.2. The prior was a positive 1.4. Prices received, inflation up while everything else is down around it. Prices paid, that's the people paying to get the goods. Yeah. Then we take a look at inventories. They're climbing. So the higher prices to me, two things. Number one, you're filling up again the supply chain. Number two, higher prices are curtailing demand to a certain degree. And the shipment index, that goes hand in hand. Hey, I don't want this. Today, Tesla raised the price of its cars, 3 to 5%? So you're seeing this go on. The PPI number, well, that came in up 0.8. They expected up 0.9. That's not as bad a number as the market was looking for. Ex-food and energy up 0.2. They expected up 0.6. These numbers are going to look, I think, even better for the March numbers for the reasons I just gave you. Red Book sales. Do you remember me telling you when we were running 14 to 16% that as we approach the summer, that's going to start shrinking away? And that's what's going on because you got to look at how bad the numbers were in the past. And when you do that, you get a better feel as to where this market was. In the Eurozone, their economic data, industrial output, and these are January numbers, flat. They had forecasted it up 0.2. Industrial output on the year, though, down 1.3% versus a forecasted up 2%. That is not good at all. So they're still feeling the wrath of the Ukrainian situation, the inflation that ravaged them, especially on energy prices. But please remember, 130 oil down to under 100 is a 30% drop. And as much as they're getting hurt, it's going to be better now than it was a week and a half, 2 weeks ago. And risk is the big thing in the futures markets right now. How do you control it? Sometimes you got to stand back from it. And I know I get paid by my subscribers to tell them what to do. And I have done, I think, my job in keeping them out of harm's way. If anything, we've done a pretty good job recently in the trading. But you have to know when you say the risk is too much. And my work does take that into account. So in my particular work, let's see if I can get this to come up. I'm not sure if I can. There we go. I had it for a second there. I go too fast with all this. Will it come in? There you go. I put out in the morning my updates. And in those updates, I am specific as to the risk is too big. Here's why it's too big in dollar terms. Here's why it's too big in technical terms. Or here it is, take this risk on. It goes both ways. Today we're spending a lot of time talking about some of the weekly charts. That as the daily charts are coming apart, the weeklies are saying, you know, maybe this is the area like in copper at 444, an interesting number in the copper where the 18-week moving average of closes comes in. You can watch my videos both on tablets. We give you a phone application for Android and Apple. It's included in the subscription. Has the quotes, the charts, all the action you need. My videos will play in it. But if you watch on our website, you get the big picture. That's the better way to do it. And you can slide around on the bottom with the slider to get to the different areas that you want. So how do you go about all this? Well, it's actually pretty simple. Just go to our website. Under the word research, everything you need is right there, and that's how you work with it. I hope you take advantage of that. I'm Ira Epstein, still catching up from being away for a week, but I'll be caught up in a day or so. You have a great trading day, and I'll see you at the end of the day with what? Our market wrap-ups.